The tables have turned for precious metals from last week, with both gold and silver now posting solid gains. But what close do the bulls need for this momentum to continue? Joining us now from the floor of the CME is II Traders' Bill Baruch. Bill, welcome back.
Thanks for having me on.
So 2-week high here today for gold. We're closing in on the 1260 mark, silver nearing 17. But event-driven rallies, as we know, are usually short-lived. How convinced are you, Bill?
Well, on the flip side of the coin, take a look at the rally we had ahead of the French election, and then the fall we had after the French election. Both of those are event-driven, and where we find ourselves right now is right in the middle of that range. So what is putting this market right here, I think, I like it long term. My view hasn't changed, but at the same time, we are running into some resistance. Now, what happened when the market was down at 1214 low is we saw over 20% of managed money longs liquidate as of last Tuesday, the week ending last Tuesday. And then, with the last time we saw a near 20% liquidation was the week ending March 14th, right before the gold bottom just below 1200 and continued a $100 rally. So I think that's a coincidence in the sense that this market found a nice little bottom of oversold territory, and people are chasing back in. Now, I wouldn't chase this rally up here, but I think this low that we saw is a very good low.
But Bill, also as we're speaking, equity's seeing their worst day in 8 months here. How long can this correction last?
2,400 has been a round number in the S&P that people have been eyeing since that March 1st test. Those FANG stocks have been really, moving and driving this market. No one wants to let go. Everybody's buying and holding because they've seen how 2008 was and the recovery, and no one wants to let go because they don't want to miss the higher levels. But people will easily remember once this market starts to go. And I think that is a great reason to have gold in your portfolio, because those who are not selling, once this thing starts to move 5 or 10% lower, then that is what could bring it further, is the panic selling. Right here, do I think the market's going to fall apart? No, I think there's a lot of support in the S&P at 2350, 2360, that gap from the French election. And I was eyeing next week with the Fed, as the minutes from the Fed, to put some pressure on this market, where we would hear them talk about overvaluations. And in the past, that has put pressure on the market, as well as a buy the rumor, sell the fact with crude oil potentially from OPEC. So I was eyeing next week for this sort of move, but I think there's a lot of support, again, at the 2350, 2360 area.
All right, and just to wrap on silver, it's trying to catch up here to gold, looking pretty solid, closing in on 17, but what close does it need here?
17 is a nice benchmark for silver, but the 50-day moving average comes in about 1730. There's a lot of resistance between 1730 and 1750. Silver needs to close out above there. The same way I'm looking at with gold is there's a trend line from the December lows that gold took out at about 12. It comes in about 1250, and now it's retesting that and closing back above that. So as long as gold holds 1250 and the 200-day moving average 1256, I like to see silver hold at least 17 bucks. And again, I like both of these in the long run, and I think there's going to be a higher move here that comes. Now, you don't want to chase them, but look for a little bit of pullback from this high and a little bit of a settle in. Maybe it might take as late as mid-June when the Fed hikes to ultimately see this market move higher from the levels we've seen. And I think that's what you've got to eye.
Bill Baruch of II Trader, thanks so much for joining us.
Thank you.
And thanks for watching Kitco's Gold Report today. We'll be back tomorrow. Hey!